Last week, I broke down the home buying process down into 7 easy steps. You can catch that video here in the corners. In today's video, I'm going to be breaking down the cost of buying a home so that you have a proper expectation set of how much money you truly need to purchase a home. Hi, my name is Jordan Brown. Welcome to my channel. I'm a real estate professional servicing the greater Austin, Texas area, and I make tons of free videos for those who are looking to buy or sell here in Central Texas. I release new content every single week, so make sure you subscribe to the channel, hit the like button, and turn on those bell notifications so that you're notified whenever I'm uploading new videos every week. So if things like pros and cons videos, model home tours, advice on what the market's gonna look like, if that is your jam, this is the channel to be at, and I hope you find it useful. If you or someone that you know is looking to buy or sell real estate in the Austin area, I'm your guy. I'd love to be a resource for you. My contact information is going to be in the description below so that we can connect whenever you're ready. One thing to keep in mind while I'm going through this video and breaking down the costs of buying a home is to understand that some of these are negotiable. This is where having a well-informed realtor who's in tune with the market is going to be crucial for you. So let's dive into it. What are the costs of buying a home in Central Texas? So your down payment is going to be one of, if not the largest portion of cash that you're going to spend on any single item when purchasing a home. There's different loan types that are available, which are going to dictate what your required down payment is. Conventional loans can require as little as 3% down of the total purchase price. An FHA loan can be as low as 3.5% down. There's also a VA loan for our active military and our veterans, which can be as low as 0% down. For non-military people who are buying their first home in an eligible area, you may qualify for a USDA 0% down loan. Your down payment is going to be sent to the title company prior to closing. Your earnest money payment is going to open up your escrow account, and it's going to go towards your closing costs should you go through with the purchase of the property. Earnest money is also refundable if you back out of the contract within your negotiated option period, which we'll talk about next, or if the seller is in a breach of contract and you want to terminate. While there's no set required amount for earnest money, the more the better, because it shows how serious you are about being involved in this property. While there's no required minimum for earnest money, I suggest putting at least 1% down. This shows that you are vested into this property and that you're serious about going through with the purchase. However, if you can afford more, do so. It shows that you've got more skin in the game and that you're going to go through with this purchase. So on a $350,000 home, earnest money would be $3,500. At least that's my suggestion. You have 2 days after going under contract to get your earnest money delivered to title. An option period is a negotiated amount of time that you have to be able to withdraw from your agreed upon contract and only lose your option money. So again, there's not a set amount for option money, but the higher, the better, because that money is going directly to the sellers. I've seen option money be as low as $200. I've seen it go all the way up to over a few thousand. Your option money is also due within 2 days after going under contract, and it gets delivered to title. So once you're in contract, you're gonna want to immediately or preemptively schedule an inspection. An inspection is about $500 right now in my area. It can vary just a little bit, but an inspection is super important. A certified inspector is gonna go out and review the property for any little defect or major defects, and they're gonna give you a report about it. With that report, you have the option to either terminate your agreement within your option period, accept the property as is, or negotiate repairs. An appraisal is ordered by your lender typically after the inspection. What an appraisal does is they have a certified appraiser come out and review your property, and they're going to base a value of that property based on market conditions, location, condition, and a few other factors. The appraisal amount is super important because the lender is not going to give you more money than what the appraiser says that it's worth. So let's say you're in contract on a home at $400,000. The appraiser goes out there, does his thing, and comes back with a value of $380,000. what happens? You are now responsible for making up the difference in cash. So you're gonna have to pay $20,000 extra if that appraisal comes in low. This payment is you making up for the appraisal gap. Now, if the appraisal comes back at the purchase price or above, you're golden. For the best idea on if your house is going to appraise or not, I highly suggest working with a realtor who knows the area, market conditions, and so forth, so you can best predict. Now look, we're not appraisers. We don't know what they're gonna come back and say, but we're in this industry. This is what we do. We can look at comps and see what houses that are similar to the one you're looking at are going for. One expense that you may benefit from paying is something called a point towards your interest rate. Let's say that you're looking to purchase a home at $300,000. In your loan estimate, you see a loan option for no points at 4.25% and another option for 1 point at a rate of 4%. Each point is 1% of the purchase price. So that 1 point in this example is $3,000. That $3,000 is an additional cost on top of the traditional loan fees. The $3,000 point payment lowers your interest rate by 0.25%, which lowers your monthly payment $44 per month and lowers your interest costs $62.50 per month. It's super important to determine if paying that point is gonna align with your goals for this property. In this specific example, it's gonna take a 4-year period to break even on paying that $3,000 up front. So if you're planning on making this a forever home, it could make sense to go ahead and pay that point so you have a lower interest rate for the life of your loan. If not, let's say this is an investment property, or maybe you're just looking to live there for a few years. Maybe you don't pay that point. So you'll also bring a certified check to closing for any remaining closing costs. These are gonna be prepaids, which are like your taxes and insurance that the seller has already paid for the year, and now you owe a prorated amount back. Your loan fees and your title search fees are also going to be included in your closing costs. Altogether, you're typically looking between 2 and 5% of the total purchase price to cover your closing costs. Now, this last bit is not a direct cost that you're going to pay out of pocket or at closing, but it's something I want to let you be aware of on your loan that you may not know now. PMI, which stands for private mortgage insurance, is added to your monthly payment if you're not putting at least 20% down on a home. And PMI is there not to protect you, but to protect the lender in case you stop making your payments on your house. PMI payments range between about 0.25% all the way up to 2.25% of your total mortgage. The higher the mortgage, typically the higher PMI payment. As I mentioned, to avoid paying PMI at all, you have to have a loan that's less than 80% of the value of the property. You can also refinance your home later on to get rid of this payment. My wife and I did this, and between not having a PMI payment and having a better interest rate, we freed up about $350 per month on our payment compared to when we first bought this house. So there you have it. There's a breakdown of the costs associated with buying a home. How do you feel about it? Are you more prepared or less prepared than you thought? What other kind of content do you want to see me cover here on the channel? You know what to do. Let me know in the comments. I hope this video provided you a better idea of the true cost of buying a home. You can see where sometimes you can make out pretty good, maybe paying less than 2% with a few out-of-pocket costs. And then you can also see where you may be paying way over if you don't meet your appraisal. So there's a lot of things to consider. I always suggest working with a highly knowledgeable realtor who is specific to that area that you're looking in. If you're looking for Central Texas, I'm your guy. Peace, love, and Texas, everybody. I'll catch you in the next one.